value. Revenue is 50%, 50 lakh. Cost is 10 lakh. So profit is 5 lakh. So what will be my entry? In profit and loss account, revenue 50 lakh. In profit and loss account debit, cost 10 lakh rupees, and my profit will automatically be reflected or be added with other profit or loss 5 lakh rupees. Is it? Very good. I am a good speaker. If nobody claps, you yourself clap and be happy. Situation 2, that is, cannot be reliably measured or probability is not there when the outcome cannot be estimated reliably. The second bucket. Recognize revenue to the extent or cost incurred which are expected to be recoverable. Here it's very simple. Very simple. If it cannot be measured, don't try to account for the profit. And cost also only to that extent where you feel can be recovered. Say you incur cost of 5 lakh rupees, but you feel that only 3 lakh cost can be recovered. So revenue should be only 3 lakh. It should be restricted to 3 lakhs. Cost 5 lakh. Cost cannot be reduced to 3 lakh. Cost has to be 5 lakh because you have already incurred. And revenue 3 lakhs, so loss of 2 lakhs. But suppose in future, next year, you feel no, the entire amount, it is can be measured reliably and the amount can be recovered. Fine, next year you will have a profit, bumper profit, because it was a mistake of estimation and no accounting policy change. So India will support you and no need to recast your financial statement. Generally, this arises in the early stages, 10%, 15%, 20%. Whatever the stage you said early, it depends on you. Nobody will make a rule for you. Now, outcome cannot be reliably. Here, out of 50 lakh contract, price only 4 lakh is explained. Out of 50 lakh, only 4 lakh, less than 10%. So, it says that if you feel that 4 lakh can be realized, so revenue 4 lakh, cost 4 lakh, profit 0. But if you feel 3 lakh will be realized, revenue 4 lakh, cost 4 lakh, revenue 3 lakh, loss 4 lakh. Outcome cannot be realized. We have already discussed. Those sitting on the back, I'm sure they are able to connect to me. If not, please come back. I'll be happy. That's why I requested Nitesh to organize for this remote and this color mic also, so that I can also dance on the floor. Otherwise, you know, at this age we can't dance. Now, situation 3. When total cost will exceed the contract revenue. Contract revenue is 4 lakh and cost is 5 lakh rupees. As we said, as a prudent and traditional, we also used to do traditionally. Loss, book, profit, differ. Loss, book, profit, differ. So here also it cannot be different. We cannot change that. That's why even in 2008, when the entire global shock, India was strong because financial system, we were going for that strong thing. But now, after introduction of 109, we don't know because expected credit loss method for provisioning will come up, and how we will handle those, it is a question. Now say, the example is, contract price is 20 lakhs, cost to date is 4,40,000 rupees, and completed is 20%. Percentage completion 20%. Revenue should be how much? 4 lakh. Isn't it? 20% will be of revenue. If you go for recognizing revenue, 20 lakh into 20%, 4 lakh. Whereas cost is 4 lakh 40,000. What we need to do? 40,000 rupees, book the loss. 40,000 rupees, book the loss. Revenue how much? 4 lakh. Cost how much? Very correct. I am very effective. So the same answer is there. Here you will find the difference because 1,60,000 and 2 lakh. So there it will be 4 lakh rupees. Now estimate, we already discussed. If there is every year, we will keep on reviewing, not changing, reviewing the estimate and our judgment. And we find that the estimate we made in previous year, the judgment we made in the previous year is subject to change because the situation has changed, the data and figures are changed. We will change the estimate, reflect in the current year. It will not be change of the policy. No need to recast the accounts. It will simply be in the current year accounts. It will be reflected. Whatever loss, profit, impact is there will be reflected in the current year account. Now example. Are you ready to give the answer for example? Yes, sir.
Earlier one example.
Yes, sir. That is loss example. Yes, sir.
1,60,000.
Yes, sir.
So should we not provide for that loss?
Sir, already 40,000 rupees is gone in the PL. 160 or making, so it's 2 lakh rupees. Now, total 2 lakh it has taken. So that is a provision. Provision means loss, booking of the loss. I could have done it 2 lakh rupees instead of 6 lakh, 160. But you say, otherwise how come the question will come up? Sanjeev, you need to appreciate now. Now, example. Thereafter we will proceed and move to service concession arrangement. A little will be difficult for our friends sitting on the far away. I'll read for benefit of all of you. Contract value 2 million. Cost in year 1, 5.52 million. 0.52 million. Progress payment received 0.56. Work certified 0.62. So here, since work certified is given, so in percentage of completion method, instead of trying other two methods, we'll go for work certified. Because they have said cost to cost, work certified and physical valuation, like naked eye valuation. So 0.62. 0.62 cost, estimated total cost of the project. Now, we will calculate 0.62 by which? 1.5 million or 2 million? We will divide by which? Cost with cost, revenue with revenue. So here it is cost. 0.62 is cost. So our total cost will be 1.5 million. So 0.62 divided by 1.5 million, that will be 1 percentage. Percentage is there. So we find that, and the profit comes is estimated total cost of the project 1.5, contract value 2 million. So 620 divided by, no, work certified is, madam, this is certified by the client. So this is our revenue. So profit is 1.55. 62 divided by 2 million into profit 5 million is equal to 1.55 is profit for this year. Profit for year 1 is 1,55,000 out of 5 lakh profit for the entire project. Once this basis has been, as I said, whatever method we use, it should be consistent. This year we are using work certified method, so that should be used for next 2 years also. Now, recognizing contract revenue, expenses and profit.
Excuse me, the last slide. What is the cost you?
Cost is 1.5 million. It is given there. Estimated total cost of the project.
No, for the first year?
First year cost is 5.2. But since they are given work certified, so we are not going on a cost to cost method. For percentage completion method, there are 3 methods to calculate percentage completion. As I said, since work certified is given, so we are not venturing into 2 other methods. We will straightway take the work certified method.
That means we take 155 as the profit.
For this year, total profit is 5 lakh rupees. Out of 5 lakh, 1.55 based on the work certified method is 1.55. Now the another example. Another example. You need to put your concentration there. Instead of looking at me, look at the screen. Fixed price 9 million, 90 lakh rupees to build a bridge. Cost 8 million, 80 lakh rupees. Profit 10 lakh rupees, 1 million. But it's not that simple. In this example, you will find we'll keep on changing our estimate with regard to revenue and with regard to cost also. By end of year 1, we find that the cost has increased from 80 lakhs to 80 lakh 50,000. So cost has increased to 50,000. We'll account for when we do the accounting in the first year and reporting period. In year 2, second year, approves a variation resulting in increase in contract revenue by 2 lakh, but additional cost of 1.5 lakh. Second year, first year already we added in the cost. Second year cost is increased by 1.5 lakh, 1 lakh 50,000, whereby revenue also increases by 2 lakh rupees. So we'll capture both the revenue and cost. So again, it's a change in estimation. At the end of the year 2, cost incurred include 1 lakh rupee for material stored at the site. What does it mean? How do you account for that?
Allocation.
Allocation. Wrong? Asset, right? Any other answer? Inventory, right? Any other answer? If it is right, then no answer. So, it is material lying at the site. That means, when the material was sent, it was debited to account. So, cost need to be reduced by 1 lakh. So, in one example, all criticality you will find. So, if you solve this example, probably contract cost to some extent will be clear to you. And it will be 100% clear once you go back to your home, read the entire text. Otherwise, it cannot be clear. Initial amount, 9 lakh rupees for 3 years we had taken, 90 lakh rupees. Then, variation. In second year, they increased 2 lakh rupees. Side by side cost also was increased to 1 lakh 50,000 rupees. So, we added, instead of changing that figure, we are adding and deducting. So, 90 lakh was original, initial. Addition was 2 lakh in second year and onward. So, if second year, third year, so it's not cumulative in third year, it's total. Total contract revenue comes to 90 lakh, 92 lakh, 92 lakh rupees. Contract cost. Let us forget that. Let us come to the last line. Total estimated contract cost. 80 lakh was there. First year increased to 50,000 rupees. So contract cost in the first year in the last line, 80 lakh 50,000. Second year increased to 1 lakh 50,000. So 80, 50 plus 150, 82 lakh rupees. Third year 82 lakh rupees. Now, if you have got the upper 3 figures, lower 1 figure, the second 2 figure will be calculated very easily. How can it be calculated? Can anybody suggest very quickly? Percentage of completion method and their cost to cost. Because if we know cost, then the second comes, it can be measured reliably, and then we can come to cost percentage completion method. And once we come to percentage completion method, the cost for this year, total cost is there, the total revenue is there, and then profit is, first year profit 950, second year profit, I'm going back, second year profit 1000 rupees and third year profit 1000 rupees. Profit is calculated because total cost and total profit has come out. Now, stage of completion. Cost incurred to date to total cost. Profit in construction contracts. The contractor determines the stage of completion of the contract by comparing the proportion of contract cost incurred for work performed to date with the latest estimated total contract cost incurred for work performed to date. In accordance with India's 11, the company recognizes profit in construction contracts when completion is more than 20%. It says that below 20%, only whatever cost incurred, recognize revenue to that extent. If loss is there, recognize loss, but no profit. Beyond 20%, you start recognizing the profit also. So contract cost incurred 2093. Yeah, I'm also wondering from where I brought this figure.
It's on the next slide, right?
No, I'm finding out from where I brought this figure.
2093 is in the next slide.
This one?
Next slide.
Yeah, just this. Yeah, I got it.
Yes. Cost incurred to total cost.
No, I got it. Some line has probably we have deleted. When doing that, cut and paste, some line has gone. So cost 2093, that cost.
This percentage of completion is given 26% of.
No. That's from cost only 2093 only we have calculated that cost of completion. So the cost, I will come back maybe after. So let us go by that. That cost is 2093. So total cost we know. Total cost is 8050 in the first year. 2093 oblique 8050. 26% is complete. So based on that, the revenue will be calculated. The revenue 9000. 26% is revenue is 2340. Cost of sales 26% 2090. So profit will be. Do we need to account for profit separately? No. If we account for revenue, if we account for cost, the profit or loss will automatically be captured. So likewise, you see in the rate one you read, the second and third year the same methodology has been done. That in second year 1 lakh rupees has been reduced from the cost for the stock which was lying in the site. So that is taken, balance figure taken as a cumulative figure. And third year is the balancing figure because we calculate only cumulative, we calculate first and second year cumulative, and then the third year is total minus first and second is equal to the third year. Now, contract outcome is uncertain. Arif has come. Arif, what time you want to start? Maybe 7:30?
Whenever you say.
Fine. Everybody is very generous to me. Thanks. God is also generous to me. ABC Limited commenced contract in 2012, and these are the figures for December 2012. Contract value 40, cost 3, which is less than estimated cost 30, so only 10%. What we discussed and deliberated, since it is not 10% is very low, so let us only recognize the cost. But if loss is there, let us recognize the loss also, but not profit. So we will only recognize cost. Limited to 3. Profit is nil. No revenue is 3. Cost is 3. No profit. Instead of 4, we are recognizing revenue as 3 because the completion is below threshold. We can take that below 20%, we should not recognize the profit. ICDS also talks about 20 or 25% only. So we should match, no reconciliation required. What we did, ICDS. Now, contract recognizing the losses. As we discussed, if losses are there in the contract, we need to recognize the loss in that year itself without waiting for the other year. But if profit is there, profit only based on the percentage of the completion. But in case of the loss, here you see cost incurred is 40 lakh rupees, 40 million. Estimated further cost to complete. So what will be the total cost? 79. And completion is 50%. Completion is 50%. Calculate the profit loss to be recognized in respect of contract B. What is the total contract value? So what will be the 50% of 70 lakh? My revenue will be 35 lakhs and my cost is 39.5. Fine. So what is the loss? How much we should recognize?
Make a provision of
4.5 9.5.
No, actually provision for the
Loss has to be recognized prudence.
Louder. Be louder. Be confident.
Loss has to be recognized instantly.
भाई मोदी जी जो करने का है. It has to be 9. The loss today is 9, not 4.5. 4.5 is only based on percentage completion. But we discussed and everybody was unanimous. But when we talked about it, I'm asking what we should do, then you are not unanimous. You are not with me. No, only 50% we should do. 100%. So loss is 9. We need to provide for the loss 100%. No hand keep, time keep. बैलेंस शीट खराब होगा होने दो, प्रॉफिट लॉस खराब होगा होने दो, नेक्स्ट ईयर फिर उसमें थोड़ा सा जोड़ डालेंगे ना, फिर प्रॉफिट करेंगे. तो 39.5 plus 4.5, so total is 44. So loss, the entire 9 loss need to be provided. संजीव ठीक है ना? ये तो बहुत ध्यान देते हो. Due from customers. Now the last slide for India's 11. Before we launch on service concession, if it 12. Thereafter we jump into Howrah, that is service concession arrangement, that is itself a big chapter. So due from customer, it's very easy. Cost incurred plus profit, if any, minus loss, if any, minus, if any, billing is made. So remaining amount need to be billed or whatever. A बच्चा क्लास का 10 क्लास का नहीं पढ़ लिखा है. Disclosure. In case of construction contract, what are the main items that need to be disclosed that we are discussing? Amount which is already recognized as a revenue. चार recognize किया कि 3 किया. Method used. Which revenue recognition method we use? Whether it was a cost plus, whether it was a fixed cost. Stage of completion. Whether it is a cost plus class. Cost to cost, whether it was a physical verification, whether it is a work certified method. For contract work in progress, तो काम चल रहा है. हाँ, cost incurred to date and recognized profit, amount advance received, amount retention. कितना पैसा रोक के रखा है? और सेठ ने मेरा 5 लाख रुपए रोक के रखा है, वो भी बताने का है. और एडवांस उससे कितना लिया, वो भी बताने का है. Gross amount due plus minus सब करके दिखाने का है.
If I can give a project wise or it is, suppose I am going through 5 contracts, the disclosure is project wise or at time?
It should be, in my view, I'm not very clear, but my view it should be project wise. That's why, otherwise how you will fill up 500 pages of a financial statement? Sorry, but तो प्रिंटर को भी काम देने का, प्रिंटर का काम खत्म हो गया था जब से ये ईमेल क्या हुआ था, खत्म हो गया था. Now construction contract is over, but not over. By spirit, we have covered construction contract. Here, we will use construction contract 11. We will venture into RF topic, revenue, and I-18. We will enter into 109, financial instrument. We will enter into intangible, 38. We will enter into 37, provision contingency. So 5 or 6 Indias we will carry together. So it will be very heavy. But take from me, friends, this is the easiest topic that I am going to deliberate, provided you are totally focused. Otherwise, this will be the most difficult topic, and when you go back your home, you will not be able to understand what Subodh Agrawal rubishly taught. It all bounced like bottom ball used to be bounced, the England captain at that time when I was kid. Now coming to service concession arrangement. Appendix A of India's 11. Or if you are talking about IFRS 11, it is IFRIC 12. It is IFRIC 12. They are separate. We are merged together. We are probably more reasonable and prudent person that at one place, if you give everything, it will be easier to connect and then understand. It applies to contractual arrangement where 4 characteristics need to be there. 4 4 characteristics. And that's why these 4 characteristics I have put in 4 colors, different 4 colors. Hindu, Muslim, Isai, Sikh. Hindu, Muslim, Sikh, Isai. So all has to come together. We are already all together. But then for purpose of accounting also, development, there need to be development. There may not be development sometimes. Financing, there may not be financing sometimes. Operation, but operation has to be there. Operation has to be there. And maintenance, generally maintenance will be there. If operation is there, maintenance will be there. So, in a service concession arrangement, development, finance, operation, and maintenance has to be there of the infrastructure. And usually it is for public services. We have seen in past, the government only were bothered about rendering service to the Aam Janata by way of budget provisions. But in foreign country or third world country, we have seen the major infrastructure has been developed by way of public-private partnership. The government can join hand with the public, and we saw, if we talk about the good highways, roads in US, it is only because of the public-private partnership. And if we are seeing the good roads and expressways in India, it is only because of the public-private partnership. If some of you have traveled in Yamuna Expressway, Delhi to Agra, which used to be nightmare to travel by that Grand Trunk Road, today you can reach in 1.5 hours to 2 hours less than, and you feel like traveling in different world, where if you even drive 200 kilometers per hour, you don't feel like it. If your vehicle is a little bit strong vehicle, you don't feel like flying, but it's still on the road and hassle-free. So it covers, generally it covers public utilities. What are those public utilities? Can be road, energy supply, railways. Road already in our country, public-private partnership, it has gone. Railways, we are talking about railways, bridges, tunnels, prisons, hospital, airport, telecom. But we will find that there are very fine line of difference, whether it should be lease, whether it should be free form, and we have also we'll have a presentation also, or whether it is bought, built, operate, transfer, or built, own, operate and transfer, built, own and operate. So there are different models. Again, we need to read the contract very meticulously to understand, nitty-gritty, jot down, and then launch on accounting or auditing. Otherwise, I've seen in windmill, I've seen one report where the auditor recommended, or the diagnostic report recommended that it should be treated as a service concession arrangement. But ultimately the management did not agree. They said, no, it's not a service concession arrangement, but it's a lease. So it should be treated as a lease. Not it's or if it is a lease, then we need to look at whether operating lease or it's a finance lease. If it is a finance lease, it's my property. If it is operating lease, fine, I will pay the rate and I will go back. No problem. Now, this standard, again, like in India's 11, it talks about accounting only by the operator. Who is operator will come on, not by the grantor. That is the private person. Operator means the person who will operate, not the person who is giving. So there are two important terminology, grantor and operator. Grantor, that means government, generally public sector or the government. And operator, generally the private sector. The key terms, build, operate, transfer. Build means it is for me as an operator. I will build the road, I will operate, and then at the fag end, I will transfer to the government. This is the characteristics of this accounting or this kind of agreement. Build, operate, and transfer. So that means I built, I operated, I transferred. Whether it is my property. Why? I built. I built up now. I will operate also. Why not my property? Fine. I'll give you opportunity to give the answer. First we'll go through the slides, then you will be, probably, you may be right, but I will not say that you are right. You may be right. But once you go through the presentation, then you say yes or no. So accounting only by the operator. That means grantor need not do the accounting now. No, they did not do any accounting. Wow, boss. Everything has to be accounted. This is standard only address the accounting by the operator. For grantor, there will be other standard. Yeah, I will not bother. There are 40 standard. And whether that will be covered by 40 standard also or not, I don't know. I don't want to pitch into that. Rehabilitate, operate and transfer. Basically, we will discuss about the first only. Build, operate and transfer. That is the most famous and in vogue in India. Now, it says that sorry, this is not India's 12, it is India's 11. Otherwise, we'll go back to Amitabh Mukherjee topic of income tax. Apology for unintentional error. Unintentional error. So there need to be, for accounting, to fall under Appendix A of India's 11, two cumulative conditions need to be fulfilled. Otherwise, it may be plant property equipment, it may be lease, or it may be any other things also. It may be totally intangible, or it may be totally financial asset also. What is the cumulative conditions? First, that is para 5A. The grantor, that means the government. Let us presume that it is government only. The grantor regulates. What the grantor will regulate? A. What services the operator will provide? First condition is what services he will provide. The second condition is to whom it provide. What service? Road service. To whom? Aam Janta. Even VIP also. Even foreigners also. To whom? Every Tom, Dick, Harry. Even animal also. No issue. Third is advance. So, toll tax. 50 rupees, 100 rupees, 500 rupees, or government will pay something. Say, government said, fine, 1 lakh rupees I will pay, 2 lakh rupees, you calculate, or I will give you 1 year license. You collect from the whosoever comes. I am not bothered. I am not responsible or accountable also. Whatever you can collect, you collect. So, if government gives me 1 lakh rupees, and then says that you collect from that, how much for? For a common chartered accountant in India and those in Calcutta, very difficult to account for. That's why they came out with this standard. And the second cumulative provision is, or condition is, residual interest in the infrastructure. The remaining, after say 20 years, the life will be over, and after 20 years, he has to transfer back to the operator, has to give back to the grantor. The infrastructure at the end of the term of the arrangement, it has to be returned to the government. Subodh Agarwal has to return this land, this road, back to the government. So I am given the right only after 50 years. So it is two conditions, 5A, para 5A, para 5B, but I have broken it into 4 parts for my convenience and to connect to you very easily. That's right. Now the operator is obliged to hand over the infrastructure to the grantor, to the government in a specified condition. So when I return the asset to the government, it needs to be in a proper condition. That will be a part of the agreement, that what condition I will return back at the end of the year. So I need to take care of the maintenance, and if there is a major maintenance, that also I need to take care. So I need to capture all these expenses in via accounting. In India 16 we have made restoration. So 37 need to be applied here. For that, that's why I said that 37 is applicable. If government gives me fixed amount, 109 need to be applicable. If government gives me right to collect amount, 38 need to be applicable. So that's why different standards come into picture to make our accounting not critical, if you understand, very easy. Now, whether the agreement falls under service concession arrangement, effect 12 or not, that this decision tree will decide. Number one, the grantor control. What are the three conditions? Control what service? Control to whom to provide the service? Control at what price? And last is to return back the end of the year. So four conditions. So first condition, whether the grantor, the government, read grantor as a government, whether the government regulate what services, to whom, and at what price? No. Then it is not a service concession. Agreed? Only one voice. Agreed? Yes. Yeah, very good. If yes, that means it may be service concession arrangement. Let us go for the other question. Whether the residual interest will be returned back to the government? No. No. If it is no, it is not service concession. Because as I say, these two para, 5A, 5B, or for that matter, I broken into four buckets. The four buckets need to be complied. If no, it is not service concession. It's a mandatory. They are no principle based. It is rule based. So we are mixed vegetable. As per convenience. So, but if yes, then we need to see, is the infrastructure constructed or acquired by the operator from a third party? Whether the asset has been acquired not from the government, from the third party, or the infrastructure used in the arrangement for its entire useful life? No. Is the infrastructure existing infrastructure of the grantor to which the operator is given access for the purpose? If it is acquired from third party, then we need to look at whether government has given. If government has given, then also it falls under service concession arrangement. So government has given me the road. He said that you operate and maintain only. Don't construct, don't finance. You operate and maintain. So it is not bought, it is ought. What you ought. Then, so if all four conditions are cumulatively, for that matter, 5A, 5B, two conditions are cumulatively complied, it will be service concession arrangement. What are the four conditions? For that matter, 5A, 5B, two conditions. To whom? What service? At what price? And whether return back to the grantor at the end of the year. Now, this decision tree is for how I will account for in my books of account as a plant property equipment, as a financial asset, or as a intangible asset. Friends, if it is service concession arrangement, there can be only two things that can be accounted for, either financial asset or intangible asset. But yes, if consideration sometimes is received in some asset which is not financial asset, then that will be first taken as our consideration, and then normal case will account for the plant property equipment. Otherwise, it is financial asset. Financial asset means, oh, probably this financial instrument has not been taught to you, that class has not been done, and this is not planned in this session also. Financial instrument is which can be exactly measured in cash or cash equivalent. Share, financial instrument. Land building, price is not fixed, no financial instrument. Cash is financial. Loan, debt, all are financial instrument. So either I am getting cash or I am getting the right. So here the intangible asset will be a right to collect. How we will depreciate? If it is unconditional right, it is financial asset. 2 lakh he will give me, it is financial asset. If it is not unconditional, because I don't know if he give me the license, I don't know how much I will collect. I may collect 5 lakh, I may collect 3 lakh. So that is intangible. That will be treated as, because that is not unconditional, there is a condition. So that is license. So that will be accounted for as financial, no, intangible asset. Intangible asset. Now let us go to the chart very quickly. Does the operator have a contractual right to receive cash? No. Then it is not financial asset. But if yes, contractual right to receive cash or financial asset, then it is a financial asset. So 109, India's 109 will come into picture. Probably 109, maybe 1032 also, and for this disclosure 107. No. Does the operator have a contractual right to charge users? No. Then it is not service concession. Yes. Then it is my intangible asset. Any confusion? We will revolve these three PPT, 3 PowerPoint. First 3 PowerPoints are very important. If you can understand these 3 PowerPoints, then only you will understand the other PPT. So, to be eligible, to be accounted for service concession arrangement, you need to first comply with 4 conditions. It should be public-private, where the government is the grantor, public person is the operator, government will regulate to whom, at what price and what service. And then the asset need to be returned back to the government if the asset has been given. If it is a pot, build, operate and transfer. And the next is, a condition has to be complied and the accounting can be either financial asset or intangible. If it is unconditional right, then it is a financial asset. And if it is not unconditional, we don't know how much we will receive, it is a intangible. 38 will come into picture. Now, why this slide is given? To make you understand that in sometimes we will find that if it is not covered by bought, if it done, then what is it? Whether accounting will not be done. Accounting has to be done. Then as I said, whether effect 4, lease, whether it is a lease, whether it is a plant property and equipment, India Solo or India Satra lease. So it has to be accounted for. So if that column which is colored, if it is falling in those columns, it is effect 12, that is appendix A of India table. So it will be accounted for as service concession arrangement. Ownership will always be of grantor. What is operator's right? Right to use. Right to use. No ownership. Capital investment, operator. Because I will build. Demand risk, it can be both. They may compensate me also. Typical duration, generally it is long term. 20 years, 15 years, 30 years. Residual interest, back to guarantor. Relevant India's, 11. Again, typographical. It is all cut and paste error, but there. So it is my mistake only, not my office mistake. So this is, if these 2 columns, 2 खंबा अगर ये है, तो ये सर्विस कंसेशन. सर्विस कंसेशन कब नहीं होगा देखो. ये 2 खंबा को छोड़ के जाओ आप. Lease. If risk is shared, duration is 8 to 20 years, and India 17 applies. Lease के लिए India 17 है. आपका कोर्स करिकुलम में है, पढ़ा जाएगा. And if it is 18 क्या चीज का? रेवेन्यू. तो केवल प्रॉफिट आने का है, माल आने का है. और आरिफ बताएंगे उसके लिए कैसा है. Asset ownership grantor, capital investment grantor, risk grantor, typical duration 1 to 5 years, residual interest grantor, then India 18 revenue में आ जाएंगे. And अगर उधर जाते हैं, build, own and operate, मतलब मालिक बन गए, ऑपरेटर मालिक बन गया, तो फिर इसका होगा नहीं था. मालिक हम बन गया तो फिर बॉट हो नहीं सकता. ऑपरेट नहीं है, ओनर हो गया, तो हमारा प्लांट प्रॉपर्टी इक्विपमेंट हो सकता है. Then it can be India 16 और नीचे में 16 लिखा है. मेरे को भी थोड़ा याद हो गया. Now, recognition and measurement of infrastructure project. Construction revenue and cost incurred during the construction period. India deliver. Percentage completion method. Correct? Everybody agree. Operation and maintenance revenue cost incurred post construction period. Post construction period. Construction complete हो गया. आरिफ का जिम्मा में दे दो यार. अपने को टेंशन नहीं लेने का. Finance income 109 effective interest rate. Borrowing cost till construction phase. अगर asset, if it is financial asset, charged to PL, but if it is intangible asset, if it is, you need to note down and remember, if it is accounting for intangible asset, it will be capitalized. The borrowing cost till from start till completion, the borrowing cost incurred will be capitalized. But if it is financial asset, it will be charged to PL. The India is 23, but will be applicable on 38, will be applicable on 109. 109 तो इसलिए भी करेंगे ना, effective interest rate तो उधर से ही लेने का हमको. Now contractual obligation to maintain and restore 37. वो किधर भी होगा, वो 37 में जाएंगे. 37. Present value आप 16 में करेंगे तो भी 37 में जाएंगे. 38 में करेंगे तो भी 16 इसमें जाएंगे और किसी में भी करेंगे 37 में जाएंगे. लेकिन वो क्या करेंगे? 10 साल के बाद में 1 लाख रुपए पेमेंट करने का है, उसका प्रेजेंट वैल्यू अभी निकालने का है और वो प्रेजेंट वैल्यू करके 10 साल में 1 लाख रुपया पहुंचा देने का है. नाउ पब्लिक सर्विस का फीचर क्या है? ग्रांटर गवर्नमेंट होता है, ऑपरेटर को खाली मैनेजमेंट मिलता है, कॉन्ट्रैक्ट में कोई इनिशियल प्राइस होता है, बाद में रिवीजन का भी चांस रहता है एंड रिटर्न जो है वो रिटर्न गवर्नमेंट को वापस करने का होता है. पब्लिक सर्विस ऑब्लिगेशंस. नाउ the small examples. TAL Limited is a company which maintains the TAL road, expressway. Government operates the road and collects revenue from operation. Government operates and government collects. TAL road क्या किया? Constructs and maintains, लेकिन ऑपरेट करता गवर्नमेंट. It pays fixed annual amount to TAL road. ये क्या है? हाँ? ठहरा है, आरिफ अहमद का केस है ये, छोड़ देने का है. इलेक्ट्रिसिटी लिमिटेड, कंस्ट्रक्शन गैस पावर प्लांट. The entity has a power purchase agreement with the District Electricity Board for covering the entire life of the power plant under which it supplies SME with 100% of the output. क्या होगा ये? इसमें ये नहीं लिखा है पावर प्लांट वापस करने का नहीं करने का. अगर पावर प्लांट बाद में गवर्नमेंट को देने का तब तो ये बॉट होगा, नहीं तो ये हमारा आइदर लीज होगा नहीं तो ये होगा. जो पावर एक्सेल एग्रीमेंट है वो आरिफ का केस में चला जाएगा 18 नंबर, वेदर इंडिया 18 और 11. तो हमको टेस्ट करने का 4 बकेट में डाल के टेस्ट करेगा. 4 बकेट को कंफर्म करेगा तो हम इसमें करेगा, नहीं तो आरिफ का पास भेज देगा. नाउ ऑपरेटर्स राइट ओवर इंफ्रास्ट्रक्चर. ऑपरेटर मींस आम पब्लिक जिसने बनाया. Operator cannot recognize infrastructure under India's 11 as PPE. No PPE. It does not have right to control of the infrastructure. Infrastructure continue to be under control of the government. Operator merely access to operate for 20 years. Operate and maintain. Bought, build, operate and transfer. No control. Arrangement is also not a lease. फाइनेंस लीज में तो मेरा माल हो जाएगा ना 10 साल 15 साल के बाद. फिर फाइनेंस में आई विल बी द ओनर एंड फ्रॉम डे वन आई विल स्टार्ट अकाउंटिंग एज अ एसेट एंड डज नॉट कन्वे द राइट टू कंट्रोल. इट विल नॉट राइट टू कवर अमाउंट टू बी रिकॉग्नाइज्ड एज इंटेंजिबल एसेट और फाइनेंशियल एसेट. ऑलरेडी डिस्कस्ड इन डिटेल दैट इट कैन बी आइदर फाइनेंशियल एसेट और इंटेंजिबल एसेट. नाउ what is the dividing line? What should be whether it should be financial asset or it should be intangible asset? As I said,